Mic check once again. All okay? All righty. Let's see what we got here. It's the nightly strategy podcast for June 15th, 2022. Thanks for your patience and watching as I'm creating an artifact to use as evidence against Jack in case he gets too big for his britches. You know, it's young fella in his 20s in Ireland, and he's going for it. So he's in the creativity course with us, and we had a couple good conversations during the initial check-in on Sunday morning at the initial coaching session. And we talked about his work in progress as a college student this summer, and he's got a window of opportunity to really explore the trading space where he's been working on his own for 4 or 5 years and now wants to be a little more systematic about it. And so he's really taken on the challenge and exploring possibilities, seeing what works, learning to trust his hands and his eyes, and showing some amazing evidence of reflective learning. I don't know how you get that smart that young. If I knew that, then I'd have been a lot smarter. So he's been watching Griff's markups on the katas for EWZ and DIA, which is a structured approach to trading 2 standard symbols with standard work every day, rain or shine, no matter what the market conditions are, and then learning and refining rule sets as you go to adapt to that challenge. And so he's now looking to modify some of his practice to use those structured rules to see how it would go. And he found it to be very natural in the ability to catch all the good moves and to calculate his shots more precisely. And then the goodness of having the rules to rely on helped him be a little more structured in his trading analysis, to become a little disinterested with the results of each trade, because his rules are what he's evaluating, not his feelings about the situation. And that's what really will burn you out. And so it worked pretty good for him, and he's done some rapid visual back testing on those same rule sets on other days that were choppier and still look pretty good. And he noticed that there is some chop right around the lunch hour, as we know. And so he is being mindful of reducing his trading frequency there, waiting to just see proper signals. And so the net effect of slowing down and focusing and analyzing the trades and stop getting so excited, and not trying to look at so many different symbols and having structured exit rules, because he didn't have that before. It was wearing him out. And now this looks to be promising for managing the emotional bank account day to day and just turning this into work. So +1 to Jack. Keep it up. This morning, I sent out a little note before the market opened and said, beware of the Fed announcement today with what could be a historic 75-point adjustment, because that might have some remarkable effects on the trading. So what you see here is the 3 days of this week. You know, day one, Monday, was actually really big because you got to take into account the gap from the previous Friday. So when you add the gap volatility, you still get an extraordinary day on Monday. Yesterday slowed down a little bit, although it did continue to sell off. And there was some late weakness in the afternoon. But I interpret this as sort of shaking out the loose hands and trying to get some inventory on sale in case they try to run it up the next day, which is sort of what happened. And then today was the day of two markets. This is sort of typical morning and lunchtime trading in the Fed on a Fed day, where you get an initial amplitude and moves, and then it begins to diminish. The waves begin to diminish. Notice this. You know, you get that size of a move. That looks like a fake one go to, but what that really is look at how strong this play was by the savvy market makers who were buying in the blue, you know, and selling in the orange. That's a pretty nice day at work. And really, that's kind of what those guys are doing right there. Then there's the fake one. Let me clean that up a little bit. Then there's the fake one go-to guys. Let me try to do this in green. See how that looks. Oops. Which is that's the go-to of the fake one go-to. And then there's a second phase of that in which you have the SSC and the move to a lower high in that blue segment. And then the the collapsing dragon in this segment as the market winds into final preparations for the Fed announcement. So this is really typical of a Fed day and the day before the Fed when you get lots of gyrations. So this is what I think of as chained swing trading one day at a time, as you're looking at market conditions and that 5-day volatility to see what's going on. And then the day of the Fed, I like to trade that morning session just for the little snippets and crumbs that fall off the table. Those are very tradable moves intraday with our R10 risk box and our standard patterns. And then the Fed happens. And then you get all of that. And I'm going to show you how I monkey around with that. Don't try this at home. But I want you to see that the rules we have are robust and that the R10 is a very nice way to manage these kinds of moves. And so this is what I was trying to say in words this morning about the impact of the Fed announcement on the intraday moves, which could be remarkable. Check or hold. So this captures the idea of swing trading one day at a time, why you pay attention to where we are in that 5-day and 10-day cycle, and paying attention to yesterday's highs and lows and the Fed days. Okay. While we're here, let me just go ahead and knock out the market health check, then I'll leap over to the sniper trade of the day. So I want you just to notice the difference between two standard markups that I use on the market health check. So this is a 30-day look at the S&P. The bars are dailies. You notice I have them very thin and hardly prominent. But what's prominent here are the things that I think are more important, like the flow of the dragon. first thing that I look at. I'm seeing this guy flowing like that. And so I look at the bottom, the belly of the dragon and the peak of the dragon, and I look at the directionality, selling off. It's supposed to be an arrowhead, flattening out, momentary rise, has rolled over sharply, has gone below the Bollinger Band mean. I like looking at the Bollinger Band mean in the middle of the river. Should probably put that in red, huh? To get a feel for the next higher time frame. So that's the middle of that 30 period, Bollinger Band. So that's the 30 period simple moving average. Whereas the dragon is giving me this this thick 10 period simple moving average. It's the difference between those two simple moving averages, by the way, which is what produces the MACD 4 seasons. So when I am looking at these, I just notice when the dragon is below the 30, that creates that, downside pressure, which you see reflected in the RL10 being in the winter, a moment in the spring, but all winter. And then right in here, when the RL10 crosses the Bollinger Band mean, there is a brief moment in which it's above, but then it quickly reverses and goes back below again. So while it's in this condition, it feels down, and then this is down, and that's sort of what you see there. So the prominent marker here, the first thing that I always see is the dragon, that 10 period mover. And then I'm noticing the segments. Like I said, I noticed the RL or the moving average 30 of the flow of the river. And then I'm noticing these segments here in the RL10, the winter, a brief moment of spring triggered by that price movement, which came up and hit the PSAR and then rejected. So I'm noticing how the PSAR acts like a lid. And then I really notice these PSAR flips, which gives me that kind of feel, which coincides nicely with the bottoming out of the RL10. And now something like a signal to the upside here says there is a moment in which this may actually occur. So there's opportunities inside those days, to take advantage of an upward rising dragon, PSAR support. And I don't know how far that's going to go, but it could go as far as the RL 270 for fair value, and the Z3, that 436 is sort of the upper limit of that. But when it can't get there, and now you get the next PSAR flip, that's really significant, because now what you have is this. You have this opportunity, because it could not breach that. Notice how the peak of the dragon in the PSAR acts like a lid on this thing. And now the downward move is natural. And the size of this move from here to here, leg one, leg one, could probably even come to here, leg one. That's how big this leg could be, and that's about what it did. The size of leg two is about the size of leg one, and bottoms out here like it bottomed out here. Now, problem is that's a lower low, so that sets up conditions for a kata 2 to the downside. So anything that falls below 372 is automatic short. with collapsing dragons and kata twos and all that other stuff. But I want you just to notice the importance of the PSAR flip, which points to a possibility, and the PSAR flip, which shows the grim reality. So that PSAR flip is significant, because if I'm getting this as my entry and this is my risk, 1, 2, that's a 2-to-1. Just getting back above the Bollinger Band mean, and maybe you're hoping for the 30-day high, which was back here. Maybe you're hoping to get to there, which is at the time of entry was it was just a move across the river to Z plus 1. That's 2 standard deviation. That's not crazy. All that is a reversion to the mean with a little spillage to the far side. That is absolutely the definition of a normal move. So if I'm buying it right here on the PSAR flip, the normal move is from Z minus 1 to Z plus 1 to Z0, sorry, from -1 to 0 to +1. Now, in the time that it takes to make this move, there's also a time decay, which says, look, that downward pressure is making that window of opportunity close. So if this thing doesn't immediately, an A move would be to immediately go to here. A B move is something like in the middle of that. A C move is something like that. A D move would be if it took that long to get over there. And an E or below is something like that, where it just drops off. So I'm thinking about, the classification or the categorization of these moves on that kind of a grid. And if that's the 45-degree angle or the objective move, anytime price is north of that, that's a good thing. If it's right on that line, that's like if it's below, when it gets below that move, dude, it is weakening. And so you're not going to stick around lower than the belly of the dragon. So this is the initial calibration of potential reward. Even if you did something wacky, like if I had a 1 standard deviation box down here to -1 or -2, excuse me, and here's -1. And there's 1 standard deviation to 0, and there's 1 standard deviation to. So that adaptive Bollinger Band mean is giving you something like a moving dynamic estimate of normal reward and risk in that framework. The PSAR flip, the entry signal, the risk box, and remember, now watch, see where the belly of that RL10 is? That was the extreme downward limit of price on leg 1, was here. And that's where the PSAR dot gets drawn. Why is that significant? Because that's the statistical limit of the downward pressure. And so anything that goes below that is an increase in the downward pressure. But this is the limit of it for right now. So while this is making its upward move, we're always mindful of that price level. And oh goodness, even if you weren't out of it from up in here, like you should have been, this is the one that tells you, look out below, and that's what's below. So respect what the stats will tell you about that price level, and notice that the belly of the RL10 is where the PSAR flip occurs when the RL10 goes through the PSAR and it closes price. Then the PSAR flips back to where the previous statistical norm was, And then you get that slow PSAR grind coming out of the station. The dragon always turns faster and gives you that. The lower skin of the dragon gives you another checkpoint in the, how much room you want to give this thing while it's moving up. You can choose, the upper skin of the dragon. That's usually too close. Spine, lower skin, PSAR. Notice now this downward slope of the RL30 to here. That's a turning point. The RL30 begins to roll up. This is owl territory in here. Now notice that by the time this turns, you probably can't buy it until it's up in here, which is fine if that's going to be a major turning point. But sometimes that early move in here, the owl's just not going to get because of math. But the owl is sort of the confirmation that that thing is moving and it was a real thing. Now I want you to notice. Come on, erase, dummy. Here is the Bollinger Band mean in the river. Pretty stable. Downward pressure. That's what a bear market looks like. Notice that the long-term fair value is up here. That's what a bear market looks like. The fact that this is running away from the true value is the difference between the RL270 and the Bollinger Band mean. So this thing is an active bear. When this thing gets better and starts cruising back up, you're going to see that when the bullish pressure starts coming in, at some point, this river is going to cross the 270, and that's going to be double plus good at some day in the future. For longer term traders, that's fine. And now I want to compare the SMA 30 Look how steady that is for our entire 30-day frame of reference. And so that's not going to change that much while the dragon is oscillating around that. So the crossing to the upside and then the immediate crossing to the downside reinforces that downward pressure. And now I want to compare that MA30 to the RL30. I'm going to draw him in black so you can really see that stand out. This is a key moment right here. This whole period of time, the SMA, or the RL30, which is the health of the trend, is down. It is below the SMA 30. Here is a turning point. There was enough healing action going on in this cluster and in that cluster. Those two efforts to reverse were enough to turn the RL30 and begin its upward journey, while that had very little effect on the MA30, which takes a lot more information from the previous 30 points, but the RL30 is faster to adapt. And so now there is the potential of some improvements in here. And then the test is when the RL30 meets the SMA 30. In this case, it rejected. It rolled over. That also happened right at the moment when the PSAR flip reverted back to the downside. And that's what happens in a bear market. So the owl gives you a warning that, hey, there may be something happening in here, and it's actually tradable on a shorter term frame of reference. but it's not out of the woods until the slope of the river reverses all the way back up and starts moving. And then it's going to be the same kind of a test in the future on the longer term when the river comes up to the 270. So the point I want to make here is that the relationship between the river and the RL30, this was peak bottom of the RL30. And then where it comes up and tests the SMA 30, this is the big question. What is it going to do? Oh, it voted down. Not surprising. And plenty of information available in the turning point of the PSAR flip. It's almost like a road sign that said, hey, stop, look down. This one was stop, look up. And the size of the box is the local adaptive risk box. Now notice how the bracket of the 3-period Bollinger Bands gives you the outer boundaries of that normal envelope. So all of, 99.5% of all the previous price action has occurred between this limit and that limit. So that gives you the range of, extreme normal. The river itself between +1 and -1 gives you 2/3 of the data. So that's the local normal, and that's the extreme normal. And this is the range within which we're conducting our adaptive hybrid trading. Now we're using things like 60-minute, 30-minute, 10-minute, 5-minute, 3-minute, 1-minute charts to fine tune these moves as they're occurring, but it happens within these limits of the market normal and market abnormal. So when I think about market normal and market abnormal, this is that normal range inside here. That's Crocodile River. Chew you up. Oh, that's what all this was. The follow-throughs were not happening. Chew you up in Crocodile River. I need a stamp with that. Maybe Godzilla. And then this is your abnormal. Between 1 and 3 on both of those. Abnormal. All right. So you can actually make a living trading from some deep region of abnormal up to the regions of abnormal. So going from Z2 to Z2, you can make a living in that distance. So you should be mindful of how far these things have been able to move in the past look back period. So the final thing that I just want to show here is that I'm looking at the volatility ranges now. There's your 1 day. And there is your 5-day range from low to high. So the percentage, that 5-day percentage, we compare to the previous 30 5-day percentages. But look how small this one was. That's a 5-day period. That wasn't much at all. And then let's see, 1, 2, 3, 4, 5. This one was not very large either. So this gives you some idea of the magnitude of that 5-day range. But then notice how the 1-day range really started compressing and has now started working potentially to the upside, aiming for the Bollinger Band mean. That's the reversion to the mean trade. That's the potential embedded in a move that goes outside of Z1. This is in abnormal land between 1 and 2 and between 2 and 3. So recoveries from here have potential to get to the far side of the river where it will test normal, the boundary of normal. There's Z1 or Z0, excuse me. And there's Z1 and there's Z2 and there's Z3. So those are like little road signs of potential moves to the upside from abnormal into the limit of abnormal defined by the Z3s. So what's the land beyond the Z3s? That is absolutely irrational exuberance. Any moves that violate Z3, there's something so strange going on that it almost invalidates the last 30 days. Like there's some black box somewhere that has all the little guys working around and they're producing these price actions. And there's some kind of normal thing going on inside that black box. You don't know what it is, but the elves are busy in there generating price. The limits of that normal are the Z3 lines because only 0.5%, only 0.5% of the last 30 days is outside of those limits. So that is really beyond abnormal. So if normal is between plus and minus 1, that's normal. Between 1 and 3 is local abnormal. Reasonable abnormal, if I can, that sounds so silly. And I can make a living looking for things that have gone into an extreme low and rebound into normal and beyond. And really, if something gets into extreme abnormal on the downside and fails, I know what to do with that. That's going to be CD all day, every day, forever, runaway freight train. I know what that's like. So I'm not worried about that. So if it doesn't fail, there's some possibility of it temporarily coming out of abnormal into normal, into the far shores of abnormal with a real strong lid at Z3. And then if it breaks above there, look out above. So that's some of the interpretation that's embedded in reading that chart as such. A lot of things going on in that lens. So if I simplify that a little further and take off some of the extra RLCO and I just go to my standard sniper trading setup, look how easier I think it is to see this already. I can quickly now see my little Z3 pinch, or I'm sorry, the Z3 PSAR flips with my little buying signal right here. And my little wrist box that comes over here from the RL10 to the PSAR. And then I see everything rolling over. And then here's my next little PSAR flip box with an entry signal to the downside. And now the 30-day low. It failed to fail further. I can see a target, to the far side of the dragon and all that stuff. Here's where that descending PSAR is telling me the limits. When that PSAR, which is going to decay like this, that's sort of my moving target for the boundary to the land of milk and honey. That's where the promise of abnormal gains are that are coming out of this abnormal low. If I can get past that PSAR, then this thing is going to be great. So I'm tentatively, cautiously optimistic as it moves up the stack, but not until it gets through the PSAR do I have anything like a sense of relief of getting through. I got to get through that fence of the PSAR. That's why that is so important. And that's why these little PSAR flip boxes are so meaningful. long side possibility, short side certainty. And now you can see how the 1 day, 5 day ranges, 10-day ranges. Here's the next 10 days. This is the 30-day range. And then I notice we're still 21% down from the swing high. So we are in bear, as if we didn't already know that. Now, I've added these two little MACD and the Williams percent are the oversold, coming out of oversold. That's what this looks like. That coming out of the oversold. And now, if this could give me a little uptick right here, can a guy get an uptick? What would we have there? We would have a form of the WMB3, which now this would be bar 1. I have a higher low that makes this bar 2. So now on a WMB3, I'm entitled to say, look, if it opens inside this yellow box and then breaks out above today's high, or which would be yesterday's high, tomorrow it'll be yesterday's high, then I have a tentative long until it breaks through the PSAR, in which I have a confirmed move to the upside. And then if it breaks above the RL10 peak, and here, now I have an emerging dragon, and now I got 1, 2, 3 reasons to love this thing to the upside. But I'm also really mindful that if this thing fails, of course it's going to fail. I don't believe in that trade because I want to have a CD, which is my favorite pattern of all. So I can be tentative about this. So do I have any belief in this thing at all? None. Zero. And in fact, the better it gets, the more I think the bad guys are going to see that as a dead cat bounce, and they're going to try to come and smash this. So when this is going up, I don't have any sense of relief or enthusiasm or optimism. I don't care about your feelings. I don't care about my feelings. I'm trading rules of going to here. And if it gets through there, well, that's good for the team. But that's the move. I don't care about that one either because I know how to get short. I don't care about your feelings. I can't make money from caring about your feelings. I can make money on your feelings if you are using your feelings to really believe in this thing and hold on to it until it breaks down, and then your feelings just collapse and you start crying in pain, and then you jettison the position, and that drives the downward move. Well, then there's all kinds of people making money on your feelings. They don't care about how your feelings feel because they're feeding their family on your feelings. So I don't care about feelings, except I care about things. I want to make sure that the feelings are not keeping me from responding to the signals that I should be looking for relentlessly in order to execute my rules like a disinterested professional robotic trader who's paying attention to what's going on. When I say robotic, that doesn't mean I'm not paying attention. It just means that I am relentless. So I want you just to notice the difference in the perceptual filter or the sense making that you get when you take the same set of data and express it in a simple sniper format versus perhaps the sense making format. Now notice there's inside the river, there's all these extra things going on inside here that I don't have on the other chart. Like on the other chart, I don't have all the Bollinger Band mean levels and the multicolored RL10s and the Bollinger Band mean and the RL270 and the envelope and all that other crap in there. When I look at the execution for trade purposes, none of that stuff is in there. And I have what I think is the minimum mission essential set. And that is, where's the dragon? Lower skin, spine, upper skin, PSAR. So if I get this little trade frame here, and if that's my risk box, for example, so if I can get that little entry, all I need to see is 1, 2, 3, 4 reasonable targets on the way up. Look at the size of those targets. Half and half and half and half. There's my 2 to 1 risk and reward. So I've got the minimum mission essential information on there. And now it feels easier for me to execute with clarity on what matters. So there's that. What happened today? Hey, let me know in chat if you found that helpful. Probably, I'll probably record that as a separate mini lesson. All right. So the S&P was up 1.25 or 1.5, I should say, roughly. Emerging markets were up 1.3. Diamonds were up 0.1 or 1%, I should say. Let's make that easier to see. Sorry. So now I'm just getting the feel for how the S&P as the centerpiece of the tradable universe, if that's the anchor point, and everything else is just navigating around it and taking it into account. That's the whale. And these other ones are just the little pilot fish. So the market was up 1.43, emerging markets 1.3, diamonds 0.96. Yeah. That was the worst performing of our 6 checkpoints. The Russell was up just a little bit more, 1.46. Treasuries finally recovered a little, 1.87. The Qs up 2.5. So the leadership that we saw yesterday in tech also manifested today with an increase in performance of from 1.43 to 2.5. So we said yesterday, wouldn't be surprising if tech continued to lead the way, and it did. Let's see how. Now we're going to look at individual sectors that were better in the green. Wood, Mexico, marijuana. S&P tech was not quite as good as the NASDAQ tech. So we're likely to see some of the more fancy tech up there, I suppose, right? Global future of finance, finally, 2.2. Real estate, 2.25. Brazil, 2.7. Consumers, discretionary, 2.8. Biotech, 3.5. The FANGs, 3.6. That's a lot of money right there. Clean energy, 3.8. The 2 ARCs, genomics, 5.25, and innovation, 6.5. Blended large cap crypto, 9%. So now the individual targets that were better: Coinbase, 6 2/3. Rivian and Tesla, 5.48. It got right to 700. Now, we said yesterday when it was at 660, it's got a $40 move available to the key price level of 700. Keeping that in mind. PayPal, Alcoa, Squarespace, 4.5. Microsoft, which is better than the Qs and better than tech. We said yesterday, Microsoft, good chance to be a leader today, 3%. You can make a living by noticing little distinctions like that. Balked, U.S. Steel. Oh, now look at Cliff, 2.3, U.S. Steel, 2.6, Alcoa, 4.5. All the metals rebounding from their abnormal lows and beginning to lead the way back up as part of the sector cycling. I was going to say sector cycling. I meant sector cycling. Apple doing better than the S&P at 2%. So that's pretty solid. So unsurprising performance. All the things that got smashed the most had a relief rally, that your Bitcoins and global futures and crypto and all that jazz. But then tech and the metals. What underperformed? A lot. There's the S&P 1.4. So now we're going to look at the highlighted sectors that underperformed. So this is what I'm doing right here is market sector target on my tactical signal collection or my signal set. The ones where I have chosen to focus most of my attention. Why? Because I get plenty of differential volatility, and it gives me manageable set of targets to evaluate routinely, and I can make a living in this area. Are there other ways to trade? There sure are. So the S&P up 1.43. So blockchain was close at 1.37. The Aussie, the other lumber, finance, Simon Property Group, 1%. And now everything else is worse than the worst performing big sector. So now these are especially suspect. So if I'm looking at further failures tomorrow, it wouldn't surprise me that things that failed today worse than the worst index are strong candidates for more pain and suffering. So lithium, staples, blended commodities, and agriculture basically flat. Now here's the cut line to things that actually lost money. These things gained, but not as much as the market. But this is where the cut line is to things that are losing. Materials, 0.03. Now, that makes the move in metals even more substantive. Why? Because the metals or materials were that far below the S&P. And yet, Cliff was that much better, and U.S. Steel was even a little more better, and Alcoa was more best. So you can absolutely bet that I'm paying attention to Alcoa tomorrow. It's paying attention to Alcoa today because I always do, but because that's the metal that quickly emerged as the best candidate today and the easiest one for me to trade. Those three are never off my radar. Hey, coach, are they ever off your radar? No, they are never off my radar. So that's the anomaly I want you to see. The difference between XLB and the rest of the market. Now, continuing. Wheat and precious, oil exploration, Ethereum, did not participate. Neither did Bitcoin in the recovery of some of those other elements. We're already down 1.5. Oil, energy, taking a needed break, minus 2%. Bitcoin 2.4, VXX down 5.3. Underperformers here in targets. Of the individual targets, only two: Devon Energy off 3%, and Robinhood 2.5%. So in the same way that I look at targets and sectors, I can look at the difference between Devon Energy. Oops, let me get a smaller grid on that one. So now I'm looking at the difference between Devon Energy at minus 3%, and the energy sector 2.2. And where was oil? Oh yeah, oil is right there, right above it. So there's a slight, performance loss there from energy down to Devon. So if energy is weaker tomorrow, then I'm going to look at Devon as an opportunity to get short. Hey, but what if tomorrow, as a recovery off of this sell-off, energy and oil start to move up? And if Devon is better, then the extra volatility that I get out of Devon makes Devon an interesting candidate for tomorrow. Because it was so abnormally at the bottom of my stack, I'm automatically interested in it for tomorrow. Check or hold. All right, some trades of the day. So thanks for hanging in there. CME. So we saw a couple days ago, CME was a Godzilla, and it traded up strongly earlier this week when the rest of the market was getting smashed. So that was interesting behavior. And we noticed that it traded smoothly. So it's got about a 75-cent standard risk box, and that's the half risk box. 5-minute chart, simplified screen. Now I get a 1, 2, 3 above the dragon. So there's a low, so that's a 1. There's a higher low, that's a 2. This is a high, this made a new high. It took out the high of bar 2, and it did not make a lower low. So that's a 1, that's bar 3. That's a 1, 2, 3 entry. It's above a rising dragon when everything in the market was going up, with starting with the futures. And here's my standard risk box. I should draw that in red. Is that a crazy entry with higher highs, higher lows, above the rising dragon on something that was strong when the market was weak and now is moving up? That's the lowest risk trade I can think of. But we dimension it out with standard risk box and half risk box. Would you argue with me on we want to raise our stop at some point here? If that's my risk, even when this thing closes here, in the first bar, would you be crazy if you just did that? Is that crazy? That's not crazy. I don't care who you are. Because once I get that, science project survived. That's all I care about. All my feelings have left the building. No more feelings. Because as soon as I bought this here, I felt all of those feelings like, oh man. And so I felt the -1R in that feeling. Bad feelings. Oh, I can move this to no lose plus dinner for 2. No more bad feelings. Leave the premises. Fireman did his job. Take that little worried chimp with you. Once you guys go eat a banana, everything's fine. Just a sign. The manager's got it now. I don't care. Now at this point, once this clears that bar's peak, you might want to just say, hey, let me move it to here. Because now I'm respecting where the entry was and the low of the bar. So maybe I just lock that in. Because I also like this little, I see that little collection in here. So if I can get this above here, I'm good. Maybe I feel like, oh, that was luckily placed. So if that corresponded with this, that's a half a bar retracement or half a wrist box retracement. I wouldn't be offended if you were there. Does that make sense? This is key to survival. You must survive, then you can thrive. You got to survive. So if you'd have been at half of this bar, you're good to go. You got to participate in the next little, when that opens and sells off and then goes further north. As soon as it clears that, I'm starting to think about, let me move this up into here. And then it gets to this peak and I'm already happier than a dead pig in the sun, because if I have that as my one reward, that's about 1. That's about 2. Easy. Hang this box from the top, take the exit, take that trade all day. All day. Every day. Thank you and good night. Right? All day, every day. Thank you and good night. You got nothing to worry about. I don't care what anybody else says. They got their lives to lead. Oh, now I notice this one. Got that nice run up. Holding. Opens. Takes that out. 1, 2, 3. Why not? Take a standard wrist box. Hang it off of that. Maybe put the stop here or stop there, so you're only risking half. Why not? You can see little caught a two wagging his tail, little K2 short there. Okay. Noted. That's what I'm supposed to do. Could not even make a new high. Opened. I've seen enough. I've seen enough. Check or hold. Why not? Together. So I'll try that. Hang my little standard wrist box off the bottom. Probably be right there. Why not? Don't care. Hasn't moved a range stat yet. Stuck around just a little too long. Not so good. Notice this. I got to get out here. Why am I not getting out there? Drives me crazy. That is all the difference. No reason for that exit. Oh, okay. Gratitude, forgiveness, zero state. I don't care about the feelings. Jesus, you know how many times I've felt that feeling? Ugh. In retrospect, that's a 0.1 difference. Okay. That's like getting a splinter. All right. I don't like it, but okay, could have been worse. It's not a stake through my heart. Now, what am I noticing here with the dragon? Could be one of those. Could you feel that happening? And then you notice the little PSARs here. So this is turning out to be a very interesting region. So I got to look ahead. It's about 5 bars. I got to be looking ahead about plus 5 bars. I can't do my job and do this if I am fiddling around with my feelings about this versus that. So you got to let it go. Zero state. So I'm noticing the rise of that PSAR, the rolling over of the dragon. There could be something like an owl on the short side over here when the PSAR gets violated. That PSAR is a really important boundary to all the abnormal gains on the downside. If it stays above that PSAR, then it could maybe find support in here and reverse up, in which case we're doing K2s all day. Good dog. So this is where it's this region right in here. Let me draw it in purple. This region in here is where all of the interesting testing is going to occur. That's what I see instantly in this framework. The rising PSARs, the possible rolling over dragons, which then makes this emerging dragon territory, right? Checker hold. I mean, I would love to see this thing hold like at the belly of the dragon. Like if this thing sold off here and then came down into here and then started to move back up, dude, that would be awesome. Dude, so that would be awesome. And I'd be on this one ready to go with a stop like right there, right? Because that would be a higher low compared to these little K2. And then it would be little K2 is already, yay, he's happy. But if it breaks all this stuff, then it's CD and owls and look out below. Check or hold. All of that is baked into the cake in this critical state. Is that a surprise? No, we just figured that out. Yellow box, standard work. I want you, this black thick box is where the PSARs flipped. It obscured the dot because it's big and fat and stupid. So here, here, here. And then on the upside, you can't even see it, but that's where the PSAR is going to draw. And then that's going to start rolling over to the downside. But that black box is the width of the PSAR. And notice that the risk box is a full 1.0 is larger. Oops, sorry, should be right there. The PSAR flip box is larger than a full 1R. But I'm going to at least draw this right here. That would be my no kidding execution. Like there is no way I'm going to stay in here longer than the peak of the dragon. So I'm really, that's about 0.3 of my 1.0 or maybe 0.2. And this is about 0.8. So I've already gotten 0.2 out of the risk. I'm not going to take even a 1R loss. Check or hold. If I'm not down to here, notice that little structure, lower highs. If I'm not already to here by this time, I got no business doing this for a living. I mean, I like the fact that it broke below here. That's a good thing. I wouldn't be offended if you put your stop there and you wanted to lock in that extra piece. Not offended. I'm not offended if you want to just say, you know what? I just want to take that trade there. Because it's already moved back up that much. If you take that trade, I'm not offended by that. That's almost a 0.8. What's your average win? I don't even care anymore, right? Hey, would not surprise me. Least surprising move of all. It goes up, it peaks, it rolls over. You know what this is to higher time frame traders? They discount this as the cost of doing business. The cost of their cost of doing business is my business. So they're writing that off. Their cost of doing business is my business. Bumper sticker, flashcard. Their cost of doing business is my business. What they have to treat as noise, I can make a living on with my team. Trade's not over yet. Can you feel it starting to be over? Why wouldn't it? Why wouldn't it stop there? So if you're still in that trade, and you probably could be, should be, don't you have to be like right about here? Because you got the spine of the dragon, or you got the lower skin of the dragon. You got to be right there. If it breaks below here, could you add a second position? Yeah, because it's now violating all this, and that's a collapsing dragon. Hooray. But I'm not going to risk that, because if I put my standard risk on this and this dragon, what if it finds support here and the dragon does this? Don't I have a low and a higher low and a kata 2 to the upside? I sure do. So I'm not going to give it that much room to find out. No, I'm going to lock in what I can get. So I got to be there. Better be there. Oh, missed that one. Dummy. There was another half an hour available. All right. So that's the maximum favorable excursion so far. So now I can be here. Dummy. Oh, gratitude, forgiveness, drive one. I don't care about the feelings. And check or hold. Cross the dragon. PSARs. Dragon. Recovery. And this is why I pay attention to the dragon. And here's the dragon starting to bend. There's your trade. Dot to dot. Money. That is money. What is that, coach? That's money. Missed it. There's the PSAR flip box. Standard work. Missed it. Sniper trade of the day for today. S&P on three. No, that's not the one I'm going to use. I'm going to use this one. Is it this one? Yeah, let's go S&P. Right from the open. Where is it? Is it here? Yeah, there he is. So opening shenanigans. The first 20 minutes or so. I also notice big gap. Price north of the dragon and rising. Buy the breakout, take the snack. It's a Fed day. The S&P is a big fat moving object. But I want to trade it later in the day when the Fed is playing, so I'm warming up. Here's the standard risk box on him. $1.25. So that gap was 2 standard risk boxes, 2 R10s. At one point, it was 0.7 in my favor, took a snack. Check or hold. PSAR flip box. Big, thick box. Standard risk. Standard exit. Check or hold. One, two. So that's about an R. Check. Standard PSAR flip box. Notice the standard work is about, the PSAR box where I would have my exit here. Am I going to stick around longer than that? No. What am I going to do if price goes through the red line? CD all day. So I've already limited the risk on this one to 0.5. So I'm long on an SSC. Check or hold. Standard exit, PSAR flip box. Kata 2. That is Kata 2 all day. If it gets below here, that is a CD all day. I should already be here and locking in the science project. Check or hold. Came down and tested it. You dirty, rotten scoundrel. Do you see why? Do you see, you rat fink? Do you see why that's such a key price level? And now notice these other key price levels here, here, Starting to diminish. Why? Fed. One last chance. PSAR flip box, standard work. Wasn't much left. Fed coming. Look out below and above. Probably want to be flat for that. In the meantime, I'm warmed up. I'm liking the size of the box. Got paid a little bit. I earned some money that I can use to monkey around with the Fed. Check or hold. You know, if this was in a sniper trading workshop, this would cost you $3,000. That's what we just saw. And now, Senior Fed. This was kind of the previous normal. Fair enough. Don't try this at home, but you should try this at home. Five-minute charts. The Fed just happened. Extreme sell-off. 1, 2. PSAR flip. This is the size of that same standard risk box that we were using. And there's the bottom of the PSAR flip. So I buy it. It moves up to the limit, moves a half a risk box back. I sell it. Later in that bar, in the next bar, it makes a new high on this sequence. I buy it with a standard risk box. It runs all the way up to here, comes back half a risk box. I sell it. Same bar, it moves back up. I buy it. So you can see where that happens again, right? So buy it, sell it, breaks out to a new local high, buy it, sell it, closes, opens, breaks out to new high, buy it, sell it. The sizes of the gains are diminishing. Beginning to diminish. This is the new region, the new trading region. The Z3 to Z3. Check or hold. I don't care about the short side at all. I'm playing the long side and just noticing. Oh, that's what that decision cost me, by the way. So I'm feeling this. One, two. I'm feeling the top of that bar and the peak of the dragon, and that feels like about a wrist box in there. Could you feel that trade? Oh, it diminished until I actually get the RL10. Price crosses the dragon. Standard wrist box to here. Kata 2. Emerging dragon above there. So there is my little tactical play. If it gets above this hump of the dragon, then I feel pretty good. Check or hold. Beauty. Standard exit. I'm just trading one because this is the S&P on Fed day, and it ain't running away forever. I'm getting paid on one. I know my limits. One, two, and some change. Gave back half here. Check or hold. And everything that I gained here is given back here. The least and everything that we gained from here was given back to here. If you hold on to your beliefs, then then your hands are full of belief. There's a meaner way to say that, I suppose. All right. So just that. Colgate Palmolive, for crying out loud. $0.50 box. Here was the close. Wasn't a gap, but it moved smartly. Wrist box off the open. Buy it. Standard work. Feels like a Kata 2. Not much happening. Get paid. Kata 2 to the downside, or a SSC to the downside, I should say. Standard size risk. Entry at the PSAR. Dragon rolls over. Standard risk box is here. So I'm actually going to take that risk, and that's about 0.2, and that's about 0.8. of the 1.0 standard wrist box checker hold. And we made a little bank on this one. Check. What should your brain be saying? Same old stuff, just the way I like it. Half a wrist box. Meets the dragon and so get out there ish. That's like going to work, you know? Two. Colgate Palmolive. Ideal for day trading because it's sexy. What would you call that? What would you call that one? Don't even need the baby. The 3 period. This black line here is an MA3. That's actually the baby dragon because Yahoo doesn't allow me to do regression lines, moving regression lines, and then a moving average on the regression line. So I just picked the MA3. It's their DMA. It's the double EMA. So it's slightly accelerated, which is so you could have an SMA3. And then if you have the double exponential moving average 3, it is just slightly faster. But if you had the RL10 and then did an MA3 on the RL10, it would look a lot like a double accelerated MA3. That's the closest I can get. So how do I know that? Because I put it on TC2000 and compared the baby dragon, which is the MA3 on the RL10, and I compared it to just a straight up DMA3, and the difference between them wasn't worth talking about. That's math. And it's clean and clear and simple. And otherwise, all I really need is the in this style, I just need when it crosses the drag and hits the PSAR, PSAR box flip. It's on this side of the dragon. Stay with it. It's starting to reverse. Get out, get in, SFC. Anybody want to fight? Where could it go? It could go here. Could it go halfway? Yeah, it could go there. This would be nice. That would be great. This is 1. That's about 2. It's like using a carpenter square. Starting to work. Starting to work. Come on, boys. Oh, that's right. Get out of it before the Fed hits. So I was hoping, but no, this was just guys monkeying around, getting positions, and then everybody was worried about the Fed, so they just backed out. Alcoa, just because. Rats. No follow through, stuck around too long. But, well, what are you going to do? What are you going to do? You're going to try it again. That's what you're going to do. It held at the edge of the dragon. So that's what I'm going to do. I'm going to try it again. Rats. Pesky PSAR. Acting like a suppressor. Try it again. Standard risk. Rats. Everything else is working. Try it again. Ah. Ooh. Okay. And done. All right. -1, +4, 3. Mexico. Frog champion. Beauty intraday trader with the frog. Yesterday's close. Big gap down. Started to roll up. I was thinking, oh man. There's 20-cent standard box. Oh man, I should get this. PSAR boundary. Maybe there's a break in the fence and the herd can run through it. We're going to try it. Sure. Take it. Tried and failed. Tried micro gain. Tried micro gain. Wasn't happening. Focus on the Fed. Brazil. Nice gap. 1, 2. Go. Cash. Short. Cash. Long scratch. Fed. Eh. You know, didn't follow through. It's okay. Sniper trades of the day. You guys have been extremely patient. Bearish normal. We've said that for a while. Nice little recovery on the 2-day. That's cool. Right on the knife's edge, right here. Could go anywhere. McDonald's, Cisco, Johnson & Johnson, Alcoa, Intel, Disney, Morgan. Tesla's off that list. Tons of auto framers. Tons of auto framers. Everything is an auto framer these days. These are the ones that are poised the most to make big gains or fails. And I look through here and say, oh, Brazil, Cliff, Materials, U.S. Steel, plenty. Alcoa. I find my friends and I stay with them. Daily squeezes. Nothing squeezed because of the size of the ranges today. But the things that are squeezable, there's plenty that did not run amok today that are ready to break out further. Walmart and Cisco. McDonald's keeps getting my attention. U.S. Steel. Cliff. The Russell, Tesla, and Microsoft. I don't need any more ideas than that. I've moved this to its own page. I'll talk more about it later. Advanced technique. So many Godzillas, you can't even shake a stick at them. You know, there's 40 or I don't know, 30, and we're still a 2.5 Z-score. Here's an enraged Godzilla because his 3.9 big day today. In the tactical symbol set, all the cryptos, materials in a Godzilla, that bodes well for my guys, right? Cliff, yeah. Alcoa, yes. U.S. Steel, yes. And that's a sleeping Godzilla too. He's just getting ready to come out of the ocean to crush, as is Cliff. No fireworks today because everything got smashed. Couple fence sitters. The most quiet based on the 5-day. The most volatile based on the 5-day. There's gold in that mine. We've seen that one. Winter, seen it. The 10-day, just how bad things are. But look what's coming around. Tesla. Short Tesla at your peril. Recovery. Holding the line. Potential, but if it fails, it's large. Critical state for testing. It's right at worked its way all the way back to the 0 line on the slope of the 30. Trades of the day from the boys. Much calmer work from Tim after last night's ritual flogging. Let's see how he's doing with the PSAR flip box. That's pretty good. That's perfect. This is really good. Got paid. PSAR flip box, crushed it. PSAR flip box, crushed it. Thank you for paying attention. Doing the work. Dollar Swiss franc on the threes. Grind. Here's perfect. That's good. Excellent. Yes. That's why you got to have that. You could even have that in ready to go. Instead of trying to chase it, you're already in and you're trying to get out. That's how you do that. And now you don't even take that trade. And now you can get long here instead of here. So it's a little slow. Still got paid. Perfect. Good try. Good try. Good try. This has got to be here. And then that would be perfect. This is good. That's perfect. This is good. That's a good exit. That is freaking perfect. And perfect exit. Short, covered, micro loss. It moves up to here, gets long. Now, again, hybrid frog is the hardest technique to trade. Let me show you something else. This will be the second night I say this. PSAR flip box, get paid. 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 Hybrid frog, hard. PSAR flip box, easy. That is a result. PSAR flip box, easy. PSAR flip box, easy. PSAR flip box, easy. That's a good execution, though, right? According to your, right according to your plan. Let's get, sorry, the mouse got wild on there. Hybrid frog, long, covered. The owl gets short here. I think, wait a minute. Oh, short. Oh, okay. I'm sorry. Here's the trade. Hybrid frog, 0.4. Okay, but still left a lot on the table. PSR flip box. Now, this owl short, not an owl, I don't think. No, it's not an owl because it's not an owl until the RL30 rolls over and the dragon rolls over. So the owl short hits right here, right where the PSR flip box hits, which gets paid. PSR flip box gets paid. So this was too early. This is where the owl hits. Study the rule. Griff from Monday, documenting all of the bar by bars in the 3 integrated patterns, 3.6R. This is a template for how to do it with the 3 patterns of SSC, Kata 2, and CD as applied to a standard frog champion. I mean, good Lord. PSR flip box, my friends. PSR flip box. PSR flip box. PSR flip box. Easy. Oh, I'm sorry. This one was up. And here's the one down. Easy. E Z. Easy. So Jack's very nice work here. Now, starts trading here, notices the downward play, breaks below the dragon. I would probably want you to exit here and then re-enter here. And then I would certainly want you to hang that wrist box off the bottom, exit here instead of here, but stay with it. Here's the next PSR flip box, crushed it. PSR flip box, crushed it. So short. You might have tried this one long and then reversed here. Short, long, short, long, short, long, short, long. Check, easy. I'm going to sell tonight for $3,000. That's what I'm going to do. WMB3. Apparently, all I had to do was act like a maniac yesterday. PSR flip box. PSR flip box. Short and then long again. PSR flip. PSR flip. PSR flip. PSR flip. Fed. 2.5. Pretty good. Wojcik's exploring now the span of controls. So he's got peak, Godzilla. This is when he started trading. So here's an entry as part of that continuation. Great exit, PSR flip. Great. Could have gotten long. I love this one. Comes through the dragon, PSR flip, short, reverses. Could have gotten this. Oh, ladies and gentlemen of the jury, PEG, whatever that is. You see what a target selection makes a difference? Godzilla. Godzilla. This is where he started trading. Z3 pinch, breakout, got paid, perfect reentry on the PSAR flip. Next PSAR flip, a quick scratch, reentry, got paid, got paid. Of course, you're not even in here. Tries this one, reverses to the upside and to the upside. 9, and that's missing maybe, the easiest move. I don't know. No, that would have been tough. So pretty good day for 9. Wish you could translate that into cricket. Still don't understand that one. PSAR flip. That would be perfect. This is pretty good. That's a great exit. Here's your PSAR flip box. Good try. Good cut. I might have tried this one and cut it here. That's a great short. Unfortunate, but a great reentry. Good cut. This is where we got to be. Away from desk. Stop being away from desk. This reversal here should happen here with that wrist box. If that gets you out, this must get you in, not here. That's a great exit. PSAR flip box would be short here. And now with a maximum favorable excursion there, we have to at least scratch it. So instead of losing that, we should be at least scratching. I'd be giving this a try, but if you're long here and you get that much, you got to at least scratch, and then you can be short and at least scratch. So there wasn't much more, but there was enough to turn this from -1 to +1. Still good work. My brother, let's see here. Breakout, get paid. 1, 2, 3. He front runs it. So when you do that and it comes through and it confirms, don't double up right away. Let it see a little bit. Okay, second, third, great job getting paid, because you got 3 in that so quick that failures really start adding up. Beautiful reentry on a failure to fail. Great, 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 and cash. Just realize that the bulk is coming from the first one and that you triple your exposure and that third one's not really helping. So I would almost say 2 and fine tune your exit, because that can get south in a hurry. This one, I think you got to be out of this in here rather than here, because that's about where I want to be short with a standard risk box here. So if I can be short here, and that's my maximum favorable excursion, then a 1, 2, 3 entry will pay me. But even so, that was pretty well managed for 6. Make a living on that. This is health peak. This is peak. Godzilla. Starts to resume, buys it. Doesn't, and maybe standard risk there. Breaks out, gets a second one, runs it up, starts coming back, says, you know what? We'll take 6. Stuck around. We should be out here. That sucked. Chasing the short. That's not a bad short. New low of the day. That's way too. So we got to be out here. That's the long that recovers it. That's where the short's got to be. 1, 2. Keep firing. So that gets you back to net zero in there. Keep firing. Don't care about your feelings. Much better today, guys. Long lesson. Very worthy of studying. Every piece of it. So thanks for hanging in. Good job, Phil.